And we can see the Dow has had a massive sell-off. Okay, since basically the start of May, we've had this double top, which was a reversal pattern. Once it broke that double top through this neckline through here, about the 12,700 mark, that's when we seriously had the downward move. Came past here through a bit of a support level, but since then we've just been going down and down and down, breaking through massive support levels. Now you notice in the newspapers or in the news or anything out there on websites that we see that the Dow has had the biggest 2 day rally in I think a 2 year period. So it's had a big rally up to the upside. But all I say is at the moment, do not fall in love with the upside. Okay, do not fall in love with the upside. Because it's still very, very scary there. Yes, we have a couple of day pop on the Dow, and it is very bullish. It does look pretty bullish as we speak for the short term. But if we have a look at the long term, right up here at 11,752, look at that major support there. And you notice that support becomes resistance. Okay, so please, whatever you do not fall in love with this upside. Yes, we're getting a couple of day pop, but please keep yourself safe and make sure you do not fall in love with this upside because we'll have a bit of resistance through here. So the Dow could pop back up to here. Yes, we could get a couple of day pop, but I expect some resistance around this 11,700 mark, and then probably turn around and continue with the overall trend. So let's have a look at the S&P. That's the Dow. Let's look at the S&P. Now the S&P is a bit different. The S&P's had a nice full run to the downside, but it has popped back up to its major support levels. We have a look at the Dow. The Dow has not even hit its support levels yet, so resistance levels. But the S&P actually has. It came up and hit its resistance level. Notice the big sell-off through here, and now it's popped back up and now hitting resistance. So I do expect a bit of resistance here. Probably come back up to say the 12,700 mark before it finds a bit of resistance. So right now we're in very uncertain times. Okay, we are very uncertain, very volatile times as we speak. The market's up and down, and as a trader myself, looking at the markets every night, every day, the markets are very, very volatile. So please make sure you do your own homework and make sure you do it absolutely everything you can to stack the odds on your side. Okay, so this is the S&P chart. Okay, so let's have a look at the Nasdaq. The Nasdaq, you actually see it's actually quite different because the Nasdaq hasn't actually even fallen below its lows back here in March, where you notice the Dow it has fallen down past its lows, and also the S&P. You see the S&P is fallen down past its lows. So we have a look at the Nasdaq here. Okay, we have a look at the Nasdaq. We can see it actually came down, bounced off our significant support level, and now it's consolidation through. It doesn't really know where it wants to go. So all I say is if we start to break down past this $18,000 mark, we have some downside action coming. If this Nasdaq's going to start breaking down, I would say the Nasdaq is going to drag the S&P and the Dow down even more where it is right now. So I just be careful and we'll watch out for that as well. So once again, if we get the Nasdaq breaking down, you'll start to see a lot more downward movement. I would say out of the market. But if we do start to break up, probably break up above this resistance line through here at the 8,869, we could actually see probably a bit of a pop to the upside. So we'll probably see a bit of pop to the upside, but please do not fall in love with the upside at the moment. We see everything there's so many bad news out there, so much bad news out there going at the moment. So please do not fall in love with the upside. So let's have a look at the Russell. Okay, this is the Russell. The Russell is the low to mid cap stock, and you can see the Russell has even came down to its respectful lows at the March level, and now had a bit of a bounce. It's now actually broken through the 6,800, 685. 6.8 level and now breaking to the upside. Now you can see back here, this is the respective support level. It became resistance, but now it's breaking up. So this could become support and therefore force a couple of day pop to the upside. So, but that doesn't mean we have not finished the bear run. We are still below this respective moving average through here, and that is saying we're still down. But I must say, the most market that is most bearish out of all of them, I must say, out of every single one I can see, is the Aussie market. Okay, traders. So we are looking at the Australian market. We're looking at the XAO, the all odds on the Aussie market, the top 200, and we can see the market falling down. But if we have a look here, we can see this was our support level through here, like the Dow we just had. But notice the market's come down, and the Dow, the Russell, the Nasdaq, all of them have had a pop to the upside, a huge pop. But look at the S&P. We actually had a down day a down day on Friday on Friday. Friday the 18th of July. So I'd be very, very careful what actually happens out there. But please be very careful what you're doing. We are bouncing between support levels, support and resistance levels, and there's a lot of activity happening out there at the moment. Okay, so please be very careful in what you're doing. There's like the ASX, the S&P ASX 200 closes down 60.6 points at 1.2% at 4,880. You've got the Nikkei 225 points index closes down. Mirror loss is 4.9 billion dollars. Okay, you got like Microsoft. Microsoft came out and reported its fourth quarter earnings at a 46% per share, or $43 million, on a revenue of 15.84 billion. Basically, that's a $4.3 billion profit fall short of what they expected. There is so much stuff happening out there. But all I say is, please, we've got the oil settles below $129. That's down 13% from its peak. Okay, from its absolute peak. So please, there's a rough and tumble times the markets out there, and if you just please be sensible, please stack the odds on your side and be very patient. Be very, very patient. And the traders in my room, you know who you are. Round of applause for you, because you're doing absolutely whatever it takes to be profitable long term in this, and that's what we're doing. We've had a couple of trades this week, and we've had a very, very high percent win-loss ratio. Very, very good success rate. You're doing really well, but make sure you're patient traders. Make sure you keep stepping up. Make sure you keep stacking the odds on your side. Okay, so make sure you keep doing that. Like Freddie Mac is mulling about 10 billion share offer, a 10 million share offer. Okay, you know the mortgage giant, Freddie Mac, is considering raising capital by selling as much as 10 billion in new shares to invest. That is scary, because we know Freddie Mac is one of the, obviously one of the mortgage, basically the mortgage capital. And if you see Freddie Mac, it's dropped about 98%. The share's about $3 at the moment. So please, we are in definitely trouble markets at the moment. Okay, gold's gone through the roof, oil's gone through the roof, our stocks are going down. It's very whippy, very volatile times. So please, if you're gonna trade this market, make sure you're doing the right things. Make sure you get coaching. Make sure you get mentoring. And that's why I run the trading room. So please head over to my website, sign up for free, put your name and email, and I'll send you all the information about this trading room, because it will help you out. I guarantee it. The traders in my room, if you listen to this, you know exactly what I'm talking about, because it's helped you so much become profitable in this uncertain times. Whether the market's going up or down, it's very, very hard to pick. So please do that. Okay, we have the Dow, the Russell, the Nasdaq, the S&P all dropping considerably. But look at the S&P, look at the Australian market. The Australian market is saying we don't even want to pull back yet. But that is scary, because if people are going short and say this thing still wants to go short, I do expect at least a couple of day pull, a couple of day nice pop up to the upside on the Australian market. Please have a good weekend. Please look after yourself, and please get some coaching and mentor behind you, because right now it is so severe, it's so hard to trade out there. Even I got coaches and mentors that support me right now through rough and tumble times. Please look after yourself. Have a fantastic weekend. If you need some support, come to my website. If you're on my website, go to the forum, start posting some stuff, and I'll be glad to answer as many questions as I can through there. Have a good weekend. I'll talk to you later on. Bye for now. Trade in the stock market is risky and can cause substantial financial loss. We do not claim or guarantee your profit from the information provided. The information in these videos is meant for educational purposes only. That being said, I've been trading the market profitably for many, many years. So please, do your own homework and make sure you look after your current financial situation.